Hi, you're welcome back. Clip 8B, John Laing. Now you've seen clip 8A and clip 8, and we're looking into John Laing because it's a recent exposure in the paper. I've read all that to you. This is a follow-on to that. Now, John Laing says he takes a hit from 175 million euro sterling to 35 million euro sterling, but that's on his global operations, although the newspaper says it's all to do with renewables, but it's not all European renewables. But the figure appears to be 55 million for European renewables. So we look at what he has in a line of wind farms. He has Horath, a 30 megawatt wind farm in Germany. He has an offshore one. This is onshore. This is offshore. Nordergrunde, and it's 110 megawatts, but he only has a 30% stake, which is 33 megawatt stake. Okay, so that's it there. The Nordgrunde wind farm, offshore wind farm, is 110 megawatts. He has a 30% stake, bringing it to 33. Okay, he has this one here, the clipped, which reminds me of kleptomaniac. Anyway, it's in that place there, Skep, whatever its name, and it's 89 megawatts. Okay, and that's in Germany, an onshore wind farm. And then he has Glencarbry in Tipperary in Ireland, 30 euros almost, just 29.7, 30 euros, 30 megawatt wind farm in County Tipperary. Now here's a total of his assets that we're dealing with in Germany and Ireland, because the article mentioned Germany and Ireland. It's 30, 33, 89, 15, bringing a total to 152, and add 30 for Ireland, and that's 182, I think there, isn't it? Yeah, 182. So he's a total portfolio of 182, and they took a write down of 55 million euros according to the article, and I think it's euros now. I'm not just too sure of that. Could be sterling either. That needs further investigation. Now he compiles a complete set of accounts. They're one of the best sets of accounts you'll ever get. I will post the actual company number, but I have them anyway, and I'm sure it's all right for me to share them. Anyone wants them. But remember, these accounts are to the 31st of March 2018 and refer only to the Irish wind farm Glencarbry. There you are. But the article in the paper says they took a look at the situation up to June of 2019, and it appears they got a shock, and that's what led to them to abandon the whole idea, and they're going to sell it all off. So do you get the point now? These accounts are going to the 31st of March, but last year was a disaster for wind with the CAM conditions, but they looked at it up to June. But these accounts only are to 31st of March. So now we look at their sales. Their sales are 5863, Their cost of sales is 1119, I've done away with the spare change at the end of the 1,000. So that's it. And then their administration expenses is 2029, Yeah, 2029, So I hope you want to take that down. So you add these two together. Now they've split the cost of sales, probably land rent and certain things they spend on buying electricity for their wind farm and all of that. That would be cost of sales. And then this is administration, other sorts of things. So other costs and expenses. So you can work it out there and not do it now. That's their costs, their costs here. And this is their income. So now you take these two from this, but there's another cost here, and that's interest on the loan, 2,056,000. See it there? 2,056,000. So that's their interest, and you can work out how much that would be. I suppose about 5%. That's their interest. And there's a talk about tax profit and pre-tax profit, but it's 658,000 euros. 0.6 of a million euros is what they made in after a profit. Now, there's a note to the account that says that 1.4 million of their income was a PSO subsidy, and I'm amazed that that's the case, because I understood this PSO was paid to the supplier, like Energia and ESB, then not to them, but that's what they say in their accounts. Now, very interesting. Fair value gain cash flow hedges. In a note to the account, they explain that they have a fair value gain of 629,422 on a hedge. This is a derivative. And this is a very interesting point, because this doubles their profit. So this has nothing to do with their wind farm activities. So we see this mixing wind farm losses with derivatives and other types of accounting things. Now remember, for every derivative, hedge or anything else, there has to be a counterparty. And if this is a profit on the accounts of John Laing PLC, an income, then it has to be shown as a loss elsewhere. And I wonder, where is that? We can't investigate that because we don't know. Where is that loss shown? Well, I believe this is what's wrong in Deutsche Bank. It's exposed for all of these. And while John Laing would like to think he can get this back, if the thing goes wrong and if it doesn't work out, I'd say Deutsche Bank will never pay any of these. I'd say the balance sheets of the world are infiltrated with these useless things. I'm only surmising that, but it has a huge effect. I mean, they made more from tricking about with derivatives. Sorry, they didn't make just more, but they made almost as much. Only a small difference. 658 as opposed to 629. They nearly made as much on this. So if they can make it on this, why can't any of the rest of us? Why do you need a wind farm to use derivatives? There's something very wrong with these derivatives, and I think eventually we will find out. Now, the profit, when you include the hedge fund, the hedges, and the income, is 1.209 million. Okay, 1.209 million. Now, the balance sheet then shows their assets that's rounded. It's only a couple of thousand now. 70 million. That's their wind farms. They're owed 4 million and they owe 8 million. So they, at the close of year, they owed 74 million. But their assets are 70 million. That's the value of their wind farm. 70 million. Okay. That's about right for a 30 million outfit. About 2.2, whatever it is, you can work it out, million per megawatt. It's gone up since that. So the next thing then is, if we look at what they owe, their long-term debts are 66. That's what they count their wind farms now, having written off some depreciation. So they brought them down 4 million due to depreciation over since the first year. They're on the go a couple of years. That's all right. So then they have a short-term debt of 4, bringing the total debt to 70 million. But we'll deal just with this 66 million. That's what the value of their wind farms are in their opinion. Okay. Now, so we can see that they've written off 55 million. So the Irish portion of that works out at 8.2 million. If you divide 55 by the total amount of their portfolios, we get that that amount. So I'll try and explain where I get that. But so if you see 66 million. Divide by 1.2 million profit that they made with the derivatives and all, right? It'll take 55 years to pay off this wind farm. And if you take the actual profit they made from wind energy, it'll take 100 years. You understand that now? So if you take the derivatives and all, they'll pay it back in 55 years. If you take just what they made on wind energy, it'll take 100 years. 100 years. I don't believe they'll ever get back that 629,000 euros. So it's totally insolvent, and they've discovered that, and they've acted on it. So if we take the 8.2 write-off, now they've written them down. And that would bring it to 57.8. In other words, the value of this wind farm would now be 57.8 because they've written down this cost. And then we divide it by the income last year, full income of 1.2, then it'll be 48 years paying back. And if we divide it by the actual real wind income, it'll take 87 years to pay it back. Okay? So the write down is 8.2 million, as I say. I hope you understand that. A write down is where you accept what you have is not as good as you thought, not worth what you thought. Now, if we make a comparison with Glencarbry and that write down, if a 30 megawatt wind farm is written down by 8.2, then Rara wind farm beside me would be written down by 3.28, and its value is 30 it's put in a cost of 30, and it must be that because it's an unbelievable lot of work done into it. But anyway, if you take it 3.28, that means it's only worth 26.72 according to that. Now remember, we go back here, with the years that is left. I mean, even with the write down, you have 48 years. That's if the derivatives are working, and if the derivatives are a gimmick, then it'll take 87 years. So this would need to be written down again. So that's basically it, and I'll end at that. Now, I think I've given you all the details there. This is very useful, and I hope that I've given you enough there. This shows you the Irish portfolio, the German-Irish portfolio, how even with all the writing down, they realise they're making a loss, and so they need somebody to come sailing in, like Greencoat it'll have to be, and buy this over. And it's chancy, but Greencoat will give them far more. Greencoat could give them 90 million for it. This is the mystery of what's going on. And the question is, if the stock market wrote down the value of John Laing due to his wind and his renewable obsession nonsense, why are they not doing it for Greencoat? It's listed on London as well. It's a London trading company. How can the investors see John Lang's problem, a good company with good business, and be blind to another company that has nothing going for it, only a load of old junk windmills? That's the issue there. Well, look, that'll do, and thank you very much. I hope I got that across, and we'll see you back when we'll have some, I don't know what will be next. I think I've dealt with that enough for the moment, and thanks for listening in. Thank you. It's 11 minutes there. Not too bad now. I think I've told you everything. If it didn't, I'll come back and develop any more there is in it, but this is definitely right. What I'm telling you here is there on their accounts, and I'll be giving you the account number in due course, okay?